Hi guys, welcome back. In this video, we'll learn more about the NIO company, which has experienced both ups and downs in the stock market. Yes, maybe not his best days right now. But they say you should buy shares when the red stuff is on in the streets, so we'll find out today. If you want to find out exactly what NIO does, what its potential risk factors are, and what future performance and stock prices analysts are expecting based on the latest data, then stay with us for a few minutes. At the end, I will also tell you about my personal trades with NIO. Please note that this video does not provide financial advice. It's simply sharing information about the company. Always conduct your own research before making investment decisions. Let's get started. What do we know about NIO? NIO Inc. designs, develops, manufactures, and sells smart electric vehicles in China. It offers 5- and 6-seater electric SUVs, as well as smart electric sedans. The company also provides power solutions, including Power Home, a home charging solution, Power Swap, a battery swapping service, Power Charger and Destination Charger, Power Mobile, a mobile charging service using charging vans, Power Map, an application that provides access to a network of public chargers and their real-time information, and one-click for Power Valet service. Since the entire EV market is poised for growth, NIO has the potential to thrive in a growing market, which is a positive aspect. Its biggest uniqueness is that its car batteries can be easily replaced in certain locations, providing a lightning-fast solution, eliminating the need for charging waits. However, the drawback is that establishing this battery replacement network is quite expensive. Furthermore, the company is involved in providing energy and service packages to its users, engaging in design and technology development activities, manufacturing e-powertrains, battery packs, and components, as well as managing sales and after-sales activities. The company was previously known as Nextiv Inc. and changed its name to NIO Inc. in July 2017. NIO Inc. was founded in 2014 and is headquartered in Shanghai, China. We'll come back to this China connection later. After unveiling several significant developments, NIO's share price has come under pressure. A major development was the Chinese government's announcement that it would begin winding down its COVID-0 plan. As a result, Chinese factories will continue to produce goods, and electric vehicle production is expected to rise when the Chinese economy reopens. According to the company's latest report, their revenues increased by 60% compared to the same quarter of the previous year. However, despite this, the stock price has fallen by 86% from its all-time high. In the fourth quarter, they delivered more than 40,000 cars. In 2022, they delivered 122,000 cars, which is a 34% increase compared to 2021. With these 122,000 cars sold, they have approximately a 0.5% market share in China. The company has sold approximately 400,000 cars to date. Most analysts agree that the stock price should rise in the future, but there are significant differences in their estimates. For the next 24 months, they predict stock prices ranging from $40 to as high as $80. But keep in mind that analyst expectations often come with reservations. Some analysts have even attempted forecasts for 2030. Some extremely optimistic forecasts put the price at over $500 by 2030, yet it's important to keep in mind that many variables might affect a company's prospects. Now let's take a look at what the latest numbers tell us from the perspective of an amateur investor. NIO's market capitalization is $15 billion. Placing it between Lucid and Rivian in terms of market capitalization. Even when considering revenues, NIO still appears cheaper compared to the other two. We'll discover many more similarities in this video. We can see that the company's revenue hasn't been outstanding in the last 2 quarters. In fact, it has fallen back to 2021 levels. Please note that the values shown here are in Chinese yuan, not US dollars. The electric vehicle market is currently highly competitive, and Tesla's continuous price reductions don't improve the chances for smaller players. This doesn't initially seem like a good sign, but let's keep going. If we look at gross profit, we can see that due to the decrease in revenue, It's no surprise that gross profit has also virtually disappeared. So far, these are two pretty bad signs. The company is spending more and more on research and development. From these numbers, we can infer that the operating income won't look too bright. Believe me, it won't. I'm starting to have doubts about analyst expectations. NIO is burning through money, as it should be. Fortunately, capital expenditures are also consuming larger amounts of money. Building out the extensive battery swapping network requires massive investments and seems like an endless project. The profit margin is negative at 70%, which is also not very healthy for long-term investors. Shareholders' equity is stable, just like the Chinese real estate market. But at least the free cash flow is positive. It was positive. In 2021, it was positive, perhaps due to some accounting magic. I don't want to imply any wrongdoing. The company's free cash flow in 2022 was negative 11 billion Chinese yuan, which is equivalent to 1.5 billion United States dollars. We could look at various indicators here for a long time, but I'll tell you that none of them look particularly positive. The company needs capital to survive, which it will acquire either by increasing its debt or by issuing more shares. Returning to the Chinese connection, we know that the relationship between larger companies and the government in China doesn't work exactly as we might be used to in our declining democracy. Taking this into account, from a foreign investor's perspective, this is a risk that we can't easily eliminate. In summary, I personally wouldn't buy NIO stock at the moment. I'd leave this wonderful opportunity to the analysts. NIO, like many other small automakers, faces significant challenges as they're not yet able to sell their cars at a profit. For a while, I also owned NIO shares, and for the sake of this video, I reviewed my trading history. The first time I bought NIO shares was on December 29, 2020, at a price of $44. And I bought more several times until May 6, 2021. At that time, the company's financial indicators seemed more promising. I was aware that NIO was significantly overvalued, but I still fell into the FOMO trap. As I learned more about the world of investments and stock market psychology, I successfully recognized that NIO might not be the best investment for the future, and in November 2021, I sold all my shares at a price of $41.70. Shortly after that, the stock price collapsed. Fortunately, I only lost about 3% of my position in the trade, and I managed to sell my shares at the right time. That's why it's crucial to thoroughly research the company whose stock you want to buy, and this way, you can avoid similar mistakes. Don't forget Warren Buffett's #1 rule. Never lose money. Investing always carries risks, but when you invest significant sums, the top priority should be not to lose money with your investment. If you liked the video, found it informative, and want to help me on my way towards 1,000 subscribers, please hit the like button and subscribe. See you in the next episode.